All right, gang, good afternoon. I hope you enjoyed your long weekend. It is Monday, and futures looked pretty much just flat during the last night and this morning. The low volume going on. So we'll see how it goes coming into tonight. But I got four that I'm watching here, one future and three stocks. And we'll go ahead and jump right into it here. And the first one that I'm looking at is going to be the Canadian dollar. So /6C. If I zoom out here, you can see that it has pretty much been in a channel ever since really making those all-time highs. Came on down and we really just kind of, up and down in this channel for a while. So what I'm looking at doing is throwing on a strangle here, pretty much very close to the all-time high, and then also covering below support should it reject the 200-day. It's been there pretty much all of last week. Okay, so on that one, right, the IVR is great, so that's good. Looking into the March 4th expiration, which is 46 days, and like I said, there's no volume today. It's super low. They are open, but not trading. Um, I want to go ahead and sell those 0.77 puts at the 10 delta and sell the 0.83 calls at the 7 delta. That will lean it a slightly long in case it does break that 200-day. But again, like I said, it covers support all the way down to the 77 cents. This will give an 86% chance. Ideally, I'll take anywhere from 15 cents on up, but I prefer obviously mid price at 17. That would be 170 bucks for only $840 in buying power. All right. Excuse me. The next one that I'm looking at is Beyond Meat, BYND. This one I want to do a little bit of a strangle, short skewed strangle. It's been dying off, but we started to consolidate here back in early December. It looked like we started to get some upward momentum, but that push bounced right off the 50-day, and we've lost that momentum again. So while it's consolidating, why not strangle it, cover the gap fill, while leaving a little bit of wiggle room back down to the downside should it break support around 58. This one has good IVR at 57. So looking into February, 32 days, so we're coming to the end of this cycle. Want to go ahead and sell those 45 puts and those 100 calls. That will lean it about 2.5 delta short per contract. This is going to be a 92 pop, so really good play here. $10 past the expected move to the downside, and it looks like almost 25 to the upside here. $1.40 in credit, 1,300 bucks to put on. So a little bit more on the expensive side. But when I'm over 90% pop, I do not mind putting up this much in buying power. Can you define it? I mean, you can always define something, gang, but should you, based off credit, it's a little rough. As you can see, I don't know if I'd really want to go right here, even though that's about where you'd go for an iron condor, and it's still only $1. So there's not quite enough credit there on an iron condor. I'd rather play that safe and come out here and just go super wide with a strangle, right? Next is going to be another strangle, but looking to get a little bit of gold in the portfolio without going to futures. So I want to do another short skewed strangle here to keep those deltas short in this double-sided market. And that's going to be GDXJ, right? The Junior Gold Miner ETF. And I am looking at just selling, like I said, a short skewed strangle above the 200-day. So we're going to have a lot of resistance there. It's actually below the 8. So we do have the 8, 21.50. A little bit more here at 42, and then the 200-day. So we got like 5 lines of resistance here. And then, of course, it's going to lean it short. So we are stacked to the downside, and we got some wiggle room down to 37. Almost exactly 37 here, about 37.2. And we're going to be down there covering that as well. So with that, February, 32 days, want to go ahead and sell those 35 puts and those 46 calls, giving me $3 past expected move to pretty much both sides here. Okay, that's going to be 82% pop, not bad. 5 short deltas with 3 contracts. I want to get at least 45 cents. I'll take all the way down to 40 if for some reason it's trading down that low. But preferably at least 45. And then again, a little bit on the high side of buying power, but it's over 10%, so I am okay with that. This one you can't really define. As you can see, the open interest and the volume is pretty low. This is volume from Friday. but it's pretty low once you get past 35 and 45. So no defined risk on this one. Right, it looks like there's only, the one with defined risk, because the next one I'm looking at is an uber short skewed strangle. All right, a lot of double-sided action, so picking one direction is a little hard. So we're just going as wide as we can here. And the next one is uber. Okay, again, really just kind of channeling. If you actually look at this, the box I'm looking at, it's been inside since May. So really, we got a lot of good coverage here. It had a good run up, rejected the 200-day, and it's back consolidating with all moving averages pretty much on top of each other. So going to be right above multiple levels of resistance and covering that recent low here as well. Okay, great IVR, 65%. Going into February here, want to sell those 32.5 puts and those 52.5 calls. 85 pop, at least 70 cents. Wallenia, almost 3 deltas short for every 2 contracts. $140 for $800. It's super cheap, gang. Okay. And then that's going to be it for you guys. That's all I got going into this short week. So I hope you have a great rest of your weekend. And maybe one day I'll see you in chat. Take care, everybody.